Thanks for your company this Friday the 16th of October. For the weekly wrap, I'm Jessica Amir, a market analyst with Bell Direct. Well, the Aussie share market has extended its stellar run for the second week, up 1.8%, Monday to Thursday, hitting a new 7-month high thanks to government stimulus and better than expected economic news. This week, most sectors charged. The tech sector squeezed the most juice, up 4%, rising to a 20-year high. Now, this has been supported, of course, by the shift to working from home. But this week, takeover talks and company news pushed the tech sector to the next level. We saw a tech company called Link Administration, which is Australia's biggest administrator of industry super fund accounts. Their shares rose 23% on receiving a spicy $2.8 billion takeover offer. Afterpay, the biggest tech stock of them all, rose 6%. Also hitting a new all-time high of $98.66 after they received the final all clear from an external AUSTRAC audit on anti-money laundering. After that, Bell Potter placed a new 121 target on APT. RBC gave it a $107 target. Morgan Stanley still says there's a 20% bull case for Afterpay hitting $242.80 if Afterpay can replicate its Australian success over in Canada and the US and also cement itself importantly in Asia. Another standout stock, not in tech though, Bapcor, a business that's benefiting from the shift in car tinkering with Aussies spending less time on public transport. Now, Bapcor shares rose over 10% last week. This week, BAP did it again, rising almost 11% to an all-time high on reporting a 27% jump in quarterly revenue. Now, Bapcor was then upgraded by Citi, Credit Suisse, Morgan Stanley, UBS, and Morgans, as well as Macquarie, with targets ranging from 855 to 880. Now, in terms of the three big themes to watch and consider, I'd say the first one is probably that the Aussie share market has formed a technical bullish signal that it'll likely move further north. Now, the market's already up 37% from the COVID-19 low, but on Thursday, we saw the ASX 200's 50-day average price, shown by the pink line, cross over and above the longer-term 200-day moving average line in orange. Now, this technical indicator called a golden cross basically indicates the market will move higher. Now, this is supported by Morgan Stanley's view that there's likely more gains to come in the medium term, given the stimulus, low interest rates, and that banks have indeed turned a corner, seeing mortgages and saving rates rise, which is boosting their earnings. Now, if you look at what happened specifically on Thursday, you'll see the market's 50-day average in pink cross above the longer-term 200-day moving average. So why pay attention to this? Well, the last time this action occurred was last April 2019. After that, the market rallied before hitting an all-time high in February 2020. But then the reverse technical trend happened in March. You can see the 50-day moving average in March crossed under the 200-day average. Now, this indicates a further fall will happen. And the market did fall to its COVID-19 low on the 23rd of March. So while I rarely look at technical indicators, this trend is really worth paying attention to. The second thing to consider is that Australia's economy is doing much better than expected. We know the unemployment rate numbers have shown that there's less people without a job than expected. Unemployment climbed to 6.9% in September. That's not as bad as the 7% rate feared. Hours worked are also up 51% from the May low, and unemployment is now expected to peak at 7.4% according to Citi. And the RBA is likely to drop their dire forecast of 10% unemployment. What else? Well, consumer confidence is up 10% from its 6-month average before the pandemic. And about half of the deferred loans in Australia from June are now being repaid. Now, this is proof that Aussies are getting back on their feet. And the third thing to think about is certainty amid uncertainty. There are risks around the upcoming US election and with European COVID cases spiking, but this appears manageable given the momentum behind economic growth and knowing that economic cycles drive markets, not elections. However, given the VIX futures are high, it tells us that investors are bracing for volatility to spike. As such, Morgan Stanley recommends investors diversify across asset classes for protection and also rotate their portfolios to small and mid caps, likely to benefit from the recovery and budgetary support, particularly as they're trading at discounts to the ASX 100. As for trading ideas that could be worth a look, Medical Developments MVP, which makes the green whistle for pain relief, was reiterated as a bell potter buy this week with a $8.97 target, implying 57% share price growth in a year. We know MVP hired CSL's former head of Securus, who helped take CSL's vaccine business around the globe and turn that business into a profitable empire. Well, they hired that gentleman as their new CEO of MVP. Other small companies to look at include audio networking company Audinate AD8, a UBS and Morgan Stanley buy, family tracking app Life360, a bell potter and Credit Suisse buy, and Quantum intellectual property, a bell potter buy. And that's it. So there's plenty of ideas to consider. From all of us here at Bell Direct, have a happy and safe weekend. Thanks for your company. I'm Jessica Amir. Bye for now.